you are going to have to work harder to attract buyers. There's a supply deficit. The demand is stronger than in Manhattan, and it is even perhaps ticking up just slightly.
Welcome to this week's look at the state of the New York City real estate market, where I take a look at the luxury market, the Manhattan market, and the Brooklyn market. I do it because I want you to be informed. It never hurts when you're a consumer to be informed.
Welcome to this week's look at the state of the New York City real estate market. This is for the week of July 3rd to July 9th. We're going to get started with the luxury market, then we're going to shift over and look at the Manhattan market, and then the Brooklyn market, and then I'm going to give you my thoughts and my takeaways. And we're going to talk about how this market has shifted a bit and is now a bit of a challenging and a bit of a tricky market. If you have any questions about this, please post those below. Here's what happened last week in the luxury market. There were 23 contracts signed, that is 6 fewer than the previous week. Condos outsold co-ops 15-7, and there was 1 townhouse in that group. Now we're going to talk about the number 1 contract. That was apartment 23 at 15 Central Park South. That was asking $34 million. It was reduced from $37 million when it was listed about a year ago in June of 22. It is a full floor. It is a condo. It has over 9,400 square feet. It includes 5 bedrooms and 7.5 bathrooms. Living room, dining room, library span 120 linear feet overlooking Central Park with a 70-foot terrace. That is stunning. The unit has a second terrace that is 55 feet long. The apartment is in a 12-unit building that is part of the Ritz-Carlton Hotel. Condo residents have access to all the hotel amenities, including a fitness center, a spa, lounge, dining, and housekeeping services. Monthly common charges and taxes total $31,605. The seller paid $27 million in 2007. The number 2 contract was at 50 West 66th Street. It was asking $23 million. It started marketing off of floor plans last summer. The condo has just shy of 3,400 square feet. It includes 4 bedrooms and 4.5 bathrooms. It has 13-foot high ceilings, views of Central Park and the Hudson River, plus 2 loggias off the living room, library, and master bedroom. Amenities include doorman, fitness center, indoor lap pool, an outdoor saltwater pool and jacuzzi, basketball and pickleball courts, screening room, game room, bike room, and the ever-popular dog washing facility. Okay, now we're going to take a look at the quick stats for last week. The total weekly asking price sales volume, 223,660,000. The average asking price, 9,724,348. Median asking price, 6,560,000. The average discount from original ask to last asking price, 10%. Average days on market, 385. Okay, that is it for the luxury market. Now we're going to take a look at what happened last week in Manhattan. So in the Manhattan market, we continue to see this kind of neutral, balanced market, although, as you will see from the charts, we are beginning to see the supply is dropping rather quickly, which is about to be expected this time of year. And the demand is also dropping a bit, but kind of moving sideways. So let's take a look at this chart now. We're going to start with this 1 week look. We're going to see the supply. The 1 week look at contracts signed, 152 down, almost 36%. Off market has risen 33.3%, up 240. The 1 month look, 1,108 properties, down almost 35%, 890 contracts signed for the month. That's down almost 24%. Off market is up 805, almost 40%. Okay, and if we take a look at this market pulse, wow, look how this little line is moving up here. That is really not because the market is getting, let's say, stronger. It is because the supply is dropping faster than the demand is dropping. The demand is definitely down, as you could see from the charts, but not dropping as quickly as the supply. Supply definitely dropping. We would expect to be seeing that this time of year. Contract signed, kind of going sideways, not dropping as quickly as the supply. So that's why you're seeing that in the market pulse. You're seeing that line moving upward a bit, though still staying essentially neutral. If we look at the liquidity pace chart, contracts signed over this 30-day moving window, we see that this is down from where we have been over the last month, 890. It is definitely down. Again, it reflects the seasonality of where we are in July. The average in July is a little higher than this, typically, usually in the low 900s. So 890, not terrible as we move through July. If we look at the more detailed supply chart, we see that the decline in inventory definitely sped up over this last week. We look at the demand, the pending sales pushed another 0.5% higher, but very well could be kind of slowing down. So if we look at this new listings chart, we see that the new listings were the lowest for this point of the year. If we look at this kind of a 5-year history, we see that this was the lowest point for this time of year, at this point of the year, in 5 years. And contract signed, was a short week, but contracts came in at the lowest level for the week since our recovery began. Nothing to really write home about. Let's say for the Manhattan market, although, we are kind of keeping an eye on this. I'm going to get into that a little bit more at the end of this report when I kind of give you my thoughts and my takeaways. But for now, I'm going to shift over. We're going to talk about Brooklyn now. The 1 week look is a little bit deceptive because overall we have a real shortage of supply in Brooklyn, but we did see a little pop, up almost 12%. 141 properties came on the market last week. The contract signed 102. That's down almost 38%. Off market up. Overall for the month, the supply was down 24%, 721 supply, 620 contracts signed, down almost 14%, off market up a little over 52%, 321. Brooklyn for this market pulse, just like with Manhattan, and Brooklyn overall, I will say, is actually even faring a little stronger than Manhattan as a market. We're definitely seeing kind of better contract activity. We're overall seeing a kind of more demand, and we're also seeing, just as with Manhattan, not a lot of inventory, although we did see that little tiny pop of inventory for the week for Brooklyn. The liquidity pace chart, 30-day moving window, 620. Again, nothing really to write home about, kind of holding steady on that. This supply chart, the decline in Brooklyn inventory did pick up its pace, just as with Manhattan. We're seeing this decline in inventory, very typical of the season. The Brooklyn demand held steady from last week. As we're seeing with Manhattan, we're likely to see this decline a bit as we move further into the summer. We'll have to see, though, whether Brooklyn will continue to hold the attention of the buyers or whether the buyers will decide they're going to take a little break as the summer heats up. As I said, in Brooklyn, the new listings actually did tick up a little bit from the prior week, which was kind kind of a nice surprise to see. We do need a little more inventory in Brooklyn, so it was good to see that. And the number of contracts signed did decline a little bit, probably very likely because of the holiday week. That's it for Brooklyn. If you have any questions, let me know specifically about Brooklyn. Please go ahead and post those below. Let me sum this up for you, right? So we talked about the luxury market, right? 23 contracts signed at $4 million and above. It's actually not terrible. Historically, the week of July 4th, I think the 10-year average is something like 19 contracts typically get signed. So 23 contracts signed, not so bad. As always, outperforming co-ops. And within that, we didn't get into this in the beginning of this report, but new development definitely outperforming the resale market. Buyers preferring to buy new development, brand new property over the resales. Okay, with regard to the Manhattan and the Brooklyn markets, they're similar and different. The Manhattan market, the supply is dropping fast. The demand is moving sideways. Market in Manhattan is neutral and balanced, though it is a more challenging and tricky market. Sellers are definitely having to work harder for the attention of the buyer. We saw this spring, people were having to have more open houses. They were having to fight harder to get the attention of the buyers. And again, didn't get into that so much, but we definitely could see that sellers were working harder. We had a good recovery this spring, although comparatively this was not an impressive market when you compared it with the last 2 years. The Brooklyn market also, there's a supply deficit. The demand is stronger than in Manhattan, and it is even perhaps ticking up just slightly, also neutral and balanced, overall outperforming Manhattan. Although, for how long we really don't know, historically, both markets start to quiet down as we move into the summer months. So we're going to keep an eye on both of those. Here are my takeaways, my advice to sellers. Again, you are going to have to work harder to attract buyers. I cannot stress this enough. Do everything you can right now to get your deal done right now, because we can see that the market is shifting and changing. Contract activity is definitely down. It went from over 1,000 at one point, 1,100 when the market was really bouncing along and lots of contracts were being signed. Now things are quieting down. It's now in the high 800s. Historically, on average, July is in the low 900s. So we know it's already quiet. You definitely want to just get your deals done. If you are not getting the offers that you want, it's your price. If you've been on the market for a little while, the market is telling you it is your price. This is a very strange market, and it is a market in which buyers are really gravitating towards those properties that they can just turn the key and walk in and move in. They definitely are struggling to get their heads around properties that need work. They're a little bit fearful of those properties and will sometimes not want to engage with those properties. And so unlike other markets that have been more forgiving, this market is not so forgiving of that. So if you have a property that needs work, you may find yourself sitting and struggling, even though perhaps you've even adjusted your price. You may need to adjust it again. Again, if this market is not holding for you what you want, and you have the option to not sell, you can always take your apartment off the market. The next time that is a good time to come on the market, historically speaking, would be the fall. Typically, our best month for contract activity is October. That's when we would see the most contracts signed. So you'd want to come on the market sometime right around middle of September, towards the end of September. Really try to time the market to really get out there, make sure the buyers see you so that you can get their attention when you know that that's when all the contracts are going to get signed. We can't control the macro factors, so we don't know what's coming. Of course, things can change with the stock market, with interest rates. So it's always a risk. But if you really, really aren't happy with what you're seeing and you don't want to reduce your price again and you want to wait it out, or you feel like things have gotten too quiet, you can always decide to take a break. Buyers. There's some really interesting opportunity right now. Depends on what's going on with the properties. Certainly those properties that have been on the market for a very long time, anything over 120 days, you probably have a fair amount of leverage there in terms of negotiability. It'll really depend on the circumstance of the seller. Don't look for a lot more inventory. You won't see a lot more coming on until probably the fall, when sellers decide to start to list again. There are people who are already planning for the fall. But if you see something that you like now, maybe it's been on the market for a little while, you might want to see if there's an opportunity there for you. All right. If you have any questions at all, please post them below. You can always reach out to me as well. You know, this is a very challenging market, so you should definitely find an advisor you trust, someone who can help you get your questions answered, whether it's me or somebody else, somebody who can help you navigate these waters. Don't go it alone, whether you're a buyer or a seller, or you're just thinking about buying or selling and you're trying to figure out the best course of action. You definitely want to have somebody by your side who can help you. As always, I want to thank the Olshan Luxury Market Report and Urban Digs for their amazing work. Their reporting helps me to help you to make great decisions. I'll be back next week with more of the very latest news about what's happening in the New York City real estate market. In the meantime, take care.